Let's take a look now at the Kenyan markets, and robust trading is the words used for trade yesterday in Kenya and Nairobi. Turnover up to 2.14 billion shillings, nearly 3 times the Wednesday turnover, and certainly the highest it's been for some time. The NSE 20 index up 38 points to 4561, and it's up 6% on the month. And the banking sector there saw the biggest volumes there. And then, of course, the shilling still in that range that it's been trading in, and it's just a slight percentage point move there, 0.06% change, and it's at 87.45. Well, we now move to the Kenyan market update, and joining us is Reginald Kadzutu, who is an independent analyst. Reginald, that 4-year high ahead of the polls. Let's talk about the exchange as a whole first, and this unusually high activity.
Yes, I guess the issue is that we are getting close to reporting season. Actually, most reports, 2012 financial reports are coming out starting from next week, going into the election period. So this has actually come as a cushion to the Nairobi Stock Exchange. So unlike the previous years where elections would come in December and investors still held a January and February to get into stocks, this time around they actually don't have that privilege or that leeway of doing that. So they have to still position themselves, especially income investors who are getting in for dividends. And if you see the counters that were actually moved, which is Athletic Mining and KCB, are counters that do pay good dividends and do have long-term good long-term prospects, so that even if things don't go well during the elections, the investors still cover that in the long-term business for these two companies still is good, so that they can wait out any violence that might come out of the elections or any dip that might come after the elections. So that has cushioned the Nairobi Stock Exchange a lot before these elections.
It does appear from the general comments from your colleagues on the show and the general mood that one sees coming out of Kenya is that there is more optimism now because the elections will be run differently, there's more decentralization. The broad picture does seem to be that the expectation is of stability.
Yes, I think violence is not really the main concern when we come to the economic arena. The issue is that the incumbent Kibaki is not running for these elections, so there's definitely going to be a policy shift. The optimism that is coming is that people believe that because of the Vision 2030, there is a roadmap of where the country should go. But the real worry that will come, and you'll find why most foreign investment has been slowing down, most industry is not expanding or even investing more, is you have to align yourself to the new policy that is going to come in with whoever is going to win the presidential elections. So the real risk that is going to come with these elections is on policy. We've had the manifestos, and this time around, I think the presidential candidates actually will stick to their manifestos, but they know if they don't stick to their manifestos, the next time around they won't be in power. So policy risk is actually the major risk that is going to come out of these elections.
Isn't the other risk, of course, it's the legitimacy of the election, it's whether the losers don't question it and that everyone accepts the result?
We hope that actually does take place. It will be good for the market, and it will be a good boost, image boost for the country. So if the losers actually do not question, then it is actually going to go well.
Well, let's look at the banking sector, which was also a gainer yesterday. And of course, the banking sector benefits from other activity in the economy when that's growing. CFC Stanbic Bank up, and NIC Bank. Where is the banking sector going?
The banking sector in Kenya is still a growing industry. If you look at the penetration rates for the people that have been banked and penetration rates for most of the financial services, it's still actually quite low for an economy of its stature and structure. So there's always room to grow. There's still a lot of room for innovation for the banking sector. You find the banking sector in Kenya is still concentrated on core banking activities, lending, taking deposits, and the normal banking activities. They are still to venture into asset management themselves. They're still to venture into other product areas that are actually earning other banks globally a lot of income away from the traditional banking. I don't think results for the banking sector will be out of the ordinary this year, but they will still be good results compared to other companies in previous years. And most people will still want to be in the banking sector, because even if anything goes wrong after the elections, people will still need to get their salaries paid through the banks, people will still need to get loans. And the current interest rate regime, where the banks are actually enjoying some cheap funds compared to what they're actually lending out is also helping the banking sector.
Yeah, well, some people would say Kenya should keep its banks in the traditional model because banks in many other countries have gone wrong by expanding too much into other activities, but that's perhaps another debate. What about this Bill Lay exiting CMC as the owners call for a ceasefire? He's left the firm, that's the motor firm, barely 19 months after he joined it. What's behind this?
I guess the pressure has become too much, and like in any corporate company, you have to look for a scapegoat, and you have to look like you're actually taking some action, and I guess it's the first action that they've taken. Whether this will actually help them or help rebuild their image, I really don't know, but I don't think the problem was really with the CEO. The problem is with governments at the board level, and I think it's something that even in Kenya and in Africa that we need to learn when it comes to corporate governance, where you will have more of non-executive directors, more of NEDs in your board than shareholders to avoid this conflict of interest that we are seeing in CMC and in other companies which may not be coming actually out to light. So I think when they restructure their board to align it to corporate, global corporate governance standards, where you have more non-executive directors, then it will work. Maybe even just try the German style where you have two boards, one full of NEDs and one full of shareholders.